You can tell me to go away, and I'm looking for a narrative that does not exist, but SPACs suffering, cryptocurrency, crypto assets now over the last week suffering as well, retail volume, call options, all of that put together. Jared, what's going on here?
Yeah, John. Hey, look, I don't want to talk about Dogecoin either, but you know, I think the big story to tie it all together is that there's been a huge rise in these big market unknowns, was what we call them, whether it's retail frenzy or the SPAC frenzy or the crypto frenzy. People have got some money. They could put it to work in the real economy. They could buy things. Right now, they're buying financial things, unusual financial things. And I think this is coming, if not totally to a top, near to a top. I mean, you've seen the top in SPACs. You've seen, you know, something like a 20 to 30% drawdown in, you know, one index of the largest SPACs. That's why we've been so cautious on it in the last few months. Is the equity issuance in some crypto-related companies going to be the top in the Bitcoin market? I'm not sure, but I think there's reasons to be cautious there too.
Jared, earlier on in the program, Victoria Fernandez of Crossmark brought up the savings rate in America as a data point to be bullish. To be bullish because it'll get pared down and that money will get spent. I just noticed from you, Jared, you're pushing back just a little bit. Why is that?
I mean, there's a few reasons. I think the big conclusion from us with regards to this excess cash, and it is a lot of excess cash on household balance sheets. But I mean, there's two things to think about. And the first one, I just want to keep it simple. There's one number that I think everyone needs to know, which is 10%. That's the share of stimulus, according to our economists, and looking at, you know, almost real-time Bank of America card data, showing what consumers around the United States are doing with their stimulus checks. And the third round of stimulus has actually had the lowest spending response so far. Just 10% of those funds, you know, have been likely to be consumed. So what people are doing with the rest, whether they're saving it in cash or paying down their debts, you know, catching up on their rent, you know, building up their own balance sheets against future risk. Or buying financial assets, you know, they're certainly not going out and spending in the real economy in the way that the inflation uber bulls had thought that they would. So I think that those fears about, you know, runaway inflation and all the hedges you need to put on are totally misplaced as far as data so far. And I think it's also worth pointing out that, you know, from the start of last year through the most recent data from the Federal Reserve, we saw that the top 20% of households saw an increase of about $1.5 trillion in their cash. The rest of the economy, the other 80%, saw an increase of only 0.7 trillion, so less than half. And we already know that the people, you know, at the top tend to spend, you know, much less of new income. It's the folks, you know, closer toward the middle and the bottom that tend to spend more. That tells us that all this excess cash people are talking about is largely, very likely, you know, to stay exactly where it is.
Barry, does that resonate with you?
It does, but here's how I would think about what's going on in Bitcoin and crypto more generally. If you go back to the beginning of January 5th, which ushered in the blue wave down in Georgia, you saw a serious steepening of the 2s, 30s real rate curve. And the reason that's so important is the 30-year part of the curve dominated the move higher. The Fed is operating, their average purchase is 6 years. This is the first time in nearly 4 decades in the market where I saw the markets reprice heavy Treasury supply. So through that whole process where the market was coming to grips with the fact that the government had borrowed $5.3 billion and was going to spend it, that curve was moving going much steeper, and Bitcoin was rallying very strongly through that whole period. This is the digital gold concept, right? I've drawn analogs back to the 1960s. It stalled out and was in a range until the Coinbase hype last week, pushed it through the range, but it wasn't destined to go higher because this whole 230s curve has completely stalled out. We had the curious Treasury market rally last week when we got super strong data, because it's never been about data, right? It's been about government deficit finance spending. So I wasn't shocked to see it run into, you know, a problem over the course of the weekend. There's a whole, you know, China controls the technology story that guys like Peter Thiel have talked about a little bit. But it really is not, I don't see it breaking out to another new level as the digital gold concept until the Biden administration regains their momentum on spending. They've definitely had a lot of pushback on the jobs plan. You know, think tanks, tax policy think tanks all pushed back and said it's going to raise less revenues, you know, impair growth by crowding out private sector investment. So for me, that's the real thing that'll get crypto going again, is this, you know, profligate government spending.
So Barry, to make it really simple and shorter for you, sir, you think we've seen peak fiscal?
Yeah, I don't think so. I mean, I think that they will be successful in spending at least, $2 to $3 trillion more. That'll come later in the year, and when that happens, these concerns will come back, and then you'll see that, like I said, that real rate curve will start to steepen out. We could have high velocity moves higher in Treasury yields, and the digital gold piece will get going again.
Are you looking to position ahead of that?
Well, I'm in all the reflation trades. I mean,
You're staying with it, Barry.
This is my idea: is you stay with the reflation trades. Your market weight on tech, your overweight materials, energy, industrials, and all the little peripheral reflation trades as well. So,
Jared, your view?
On trades or on crypto?
On those trades.
On trades, I think that you've got to be looking at some unexpected winners from infrastructure. It's not materials, it's not defense from R&D. It's not any of the big headline names that people were talking about 3 or 6 months ago. There's a lot of unusual winners. Things, like actually tech is going to be a big winner, especially hardware. Industrial automation, not old school industrial, but the kind of new productivity enhancements. Real estate, industrial real estate and REITs have vacancy rates near record lows. We do have a CapEx build out. I think you're going to see real estate be a big winner. Even healthcare services, things that people weren't thinking about because basically the Biden plan hasn't been constructed in any of the ways that people were thinking about.